Hi there, traders. This is Brad Gilbert with the weekly kickoff. All right, now to start the week, let's just wind it back to Friday. Okay, dollar stays lower after US jobs data. Now, the data itself, as I said on the preview on Friday, you could get one up, one down, and it's not a great trading situation. But the outcome from this is good. But let me just explain. So the non-farm payrolls stronger than the forecast. The unemployment rate, if I can get that out, worse than the forecast, right? But not outside the ranges. So what that does for us, it basically, bit of chaotic price action at the time of the release. But the key here is the unemployment rate. That's what the Fed will be looking at. And it is blowing out a little bit. Now, the good thing is it's not dramatic. If this is 4.3, 4.5, we've got chaotic market conditions, everything's all over the place. The market discombobulates. The fact is we are seeing the US numbers now dribble lower, gives us better trading opportunities going forward. You've got to understand that. And what you can see here, the US dollar relative strength, okay, the dollar's going down against most things. Okay, there's the odd currency here and there, obviously dollar CAD with the Canadian numbers, employment numbers there also, but that's what's happening, right? The US treasuries are edging lower. Once again, there's no dramatic, gapping in the market. This is leading towards really good trading markets, okay? Good trading conditions. So lower interest rates, of course, you're going to have higher equity markets, a risk-on profile, and that's what we want, right? Euro, sterling, Aussie, Kiwi up, the dollar down, and that gives us really good trading conditions to start this week, all right? Now, if you want to look at the sort of action too, because when it comes to this week's activity, if I just get up the trading economics, a bit easier to see the whole week here. Now, you come through the week, like Monday, yeah, not much on. Tuesday, I wouldn't be worrying about the Aussie numbers. Fed Chairman Powell tested me that's something. RBNZ interest rate decision on Wednesday. That's going to be as loose as a goose. I wouldn't be sort of putting my hand up to have a crack at that. No change expected. The Fed Chairman Powell has got his little speech, but you come into Thursday, right? It's a big day for sterling because we've got a bunch of UK numbers and then we've got the important US inflation numbers. And we are looking for weaker numbers this time around. And once again, like the non-farm payrolls, we want weaker numbers, but we don't want dramatic shifts in the market. In the data. Because if we get big gapping and big variance in the numbers, means the sort of market's a little bit out of whack. But so what we're looking for here is, if I just come down, CPI numbers, right? Reuters poll 3.1, the range 3 to 3.3. If this number comes out as expected, that's good, right? It's good for a weaker dollar. It's lower than where it was before, and we get that nice trading conditions. If it comes out like 2.8, we're going to get gapping in the market. We're going to get, it's going to be just tricky, right? So don't think numbers as expected here are not any good for us. If you're thinking extremely short term, like just the opportunity itself, yeah, sure. But as I said, if this comes out below 3%, you're going to have chaotic trading conditions. Liquidity is going to disappear and the whole game is up, right? So a number either 3 or 3.1 is good for us. It means lower dollar in an orderly fashion. And I tell you what, as a trader, that's what you want. And if I just come over here to the interest rate probabilities, right, there's been some shifts this week. Noticeably, the Aussie, the RBA, right, no cut, no change, 67.5%. It was up to about 67.5% for a hike, right? So that's really backed off. So I've been talking about getting long Aussie against a bunch of instruments. Maybe that's just a little bit weaker sentiment at the moment, but it won't be against the sterling, Swiss, and the Bank of Canada, right? Because they have got, around 60% or 61% chance of a cut at their next meetings, which for those countries that aren't cutting means they go up, right? Now, the Federal Reserve, okay, we're looking at the moment, no change, 92%. But if we dig a little bit deeper here, you can find out really what is going on. So if I go just into the Fed and I scroll down here, look at the probabilities for or the probability distribution for the Fed. Check out here, a cut, 76.9% in September. That's what we're talking about. This is where the dollar is just going to drift lower. And this is where the US CPI numbers, we just need that 3.1 print or 3%, and we've got a trending US dollar going down, and that works for us on many levels, right? So don't worry about if you missed the non-farm payrolls. Man, I sat back and watched it because I thought it was going to be a dog's breakfast. So just looking at the daily charts, right? We've got this trend channel in the dollar index. So a breakdown here would be great. A breakdown through 103 really says sayonara to the dollar, but we've got some great levels coming up. Sterling, okay, Aussie's a little bit higher already. We've got trend lines both sides, euro and Kiwi. Dollar CAD coming back to retest, but you know what? That's going to keep going down, especially with oil still remaining above $83 a barrel. Dollar yen, well, we saw a few little murmurs. I'll tell you what, if the US CPI numbers are weak, you've got to be on high alert for a lower dollar yen. It'll be the ideal time for the BOJ to hit the market because it won't bounce. No one's going to be buying dollars if we get weaker US CPI numbers. So now is the time. Put dollar yen back on your radar and get ready to trade it. Dollar Swiss, we've got a prime level here on the downside as well. Short-term support, but you know what? That's all we've got, and that's where we are. So this week is shaping up gorgeously, right? As I said, we've got that nice, just drifting lower US dollar. We get some follow-through data here. We could see things take off, right? And if I just sort of scroll back up, there's not a lot really until sort of like Thursday, obviously, is the main day, right? If you're busy through the week, try and just give yourself some time on Thursday if you're in Europe, right? UK data, very good. And then obviously the key data here will be the CPI numbers. That's going to give us the answers that we're looking for. And as I said, numbers as expected. Okay, let me just fix that up. 3.1, that's weaker than prior. Dollars going down, and everyone will start getting on the weak dollar trend. And that's where the cash is this week, right? So don't worry about rushing in. Keep an eye on the markets, right? This tone, okay, this lower interest rate environment now, you're going to have higher equities going forward if we get the weaker US CPI numbers. Euro, sterling, Aussie, Kiwi up, dollar down. Now we've got good conditions. This is where all your hard work, you know, performance anxiety, making some cash, losing some cash on these up-down markets, this is where it can change very quickly. Now, hopefully you've got some cash in your account to hit these opportunities because now you're going to be making money, right? Trending markets equals cash. That's why I'm sort of, you know, a little bit pumped about the whole situation. So this week, really good. You've got to wait till Thursday for the real big numbers, okay? The US inflation numbers. Outside of that, you got some scraps, right? So don't get too caught up in the markets earlier in the week. Let's see what happens here on Thursday. UK and US data, the key to it. Coming to Friday, it's pretty much over, right? You got the PPI numbers, but you know what? The CPI is going to give us the answers we want. So cracking market conditions, great potential from the data coming up. This is showtime, guys, and just remain patient. Let the data roll out, and then let's look for the opportunities. We may, in fact, start to see these things, these instruments drift, right? Especially if the dollar index starts to break down here. We're going to see euro above 109. Okay, actually, out of all those pairs, sterling, I'm very positive about, and it's got a great level. Sterling is probably the pick of the bunch out of all of them. Just remember, euro here, right? We've got that geopolitical situation, the French election coming up, so that may stall a bit behind sterling. Right, I'd say going forward, sterling and yen, the two pairs I talked about on Friday, these are probably your go-to pairs. So just keep an eye on those two. That's where the cash is going to be. I'd throw in dollar Swiss there as well, potentially as well, coming off a nice overbought situation. All right, guys, great week ahead. Good luck. Tune up your charts and get ready to take advantage of these good market conditions. Cheerio.